Hey, how's it going? Welcome to A Trader's Life. I hope your trading week is going well whenever you find this episode. If you've ever thought just maybe you could build up enough capital to attract investors and set up your own fund and even become an authorized money manager, I think you'll find this episode particularly interesting. My next guest, Charlie Burton, has been trading over 25 years, is in fact an authorized money manager. He's also appeared on BBC in a documentary talking about trading. He's won live events, Forex live events, and has also given talks and so on around the world at various stages in his career. Really experienced guy, from intraday to swing to position trading. These days he does more swing trading and position trading than intraday, simply because intraday means you're stuck in front of the screen all day. We got together early in February, just before Trump hit the tariff button and turned everything upside down, talking about making Gaza a sort of Riviera, much to everyone's dismay. So enjoy this episode and don't forget to subscribe to the show. Charlie, hi, how are you doing?
Good afternoon, good evening. Hi, Nick.
Yep, depending on where you are in the world.
Yeah, exactly.
Yeah,
I felt
yeah.
like I was going to do the Jim Carrey line then. Good morning if I don't see you. Good afternoon, good evening, good night.
Yeah, exactly. So why trading? Why did you get into trading and why are you still passionate about it?
There was a sigh there because I had to remember. It's a long time ago. And so why did I get into trading? I got into trading really on the side from my main career. I was in financial services anyway. I worked for fund management firms. And so trading was something that I thought would be of interest. Someone invited me to go on a trading course in the late 90s. And with them, a friend of mine. And I thought that sounds really interesting. It was all about options trading in the US market. And it was a 4-day options trading course. And so that's what got me into it, just purely out of interest. I was never one of these people who got into trading and thought I want to become a full-time trader. There was none of that. It was purely just a hobbyist. It was on the side. I loved my career. And but then, of course, you develop a passion, as you said, and that comes, I guess, after. And so I was doing on the side for 4.5 years before I went full time. So, but coming back to what you just said about passion, yeah, I think you have to be passionate about what you do. And why am I still passionate? Well, why is anyone passionate about an endeavor that they enjoy, whether it's sport, whether it's chess, whether it's art, whatever it is. And trading is no different. And I feel that trading is one of the biggest mental challenges, as you know, that you could ever have. And so, and I think probably because of that, that there's like this carrot being dangled in front of you all of the time. It's always just moving slightly. So you've got to just stay up with it all of the time. And so no year is like the last year, really. And for that reason, that ignites your passion over and over and over again. So if it became too easy, then maybe your passion would go. So no, still passionate after all these years.
Yeah, I think that's very much the case, isn't it? With a kind of passion that you've got, it's got to be varied. It's got to be challenging. If you're just repeating whatever you're doing, whatever job it is, it's soon going to just get tired and monotonous and what have you. You need that challenge, really, and trading is full of those.
The irony is, it is absolute core. We buy low, we supposedly sell high. So it's simple as a concept. So you could say, well, that's monotonous, but is it anything but? It's anything but monotonous because there's so much information that we're taking in, whether it's technical information, fundamental, macro information, whatever it is that we're using to navigate the markets. And so, yeah, it changes on a day-to-day, week-to-week, month-to-month basis.
How did you start? Did you start on Forex or?
No, stocks. So I was trading individual stocks. So I was buying US shares, and so I was screening for companies based on fundamentals, and then I would have a because I'd be holding on to stocks for several months at a time, big swing trades, because I wasn't a full-time trader then. And so scan based on fundamentals, then look at the technicals, and then look at the options pricing around them, and then keep monitoring them. So I build a watch list, and then you would then trade that watch list over time. So yeah, so no, the first well, certainly the first couple of years it was purely stocks, and then gradually started trading S&P futures and the QQQ Nasdaq ETF, and then FX came after that.
Are you mixing your styles? So, sort of swing trading and position trading and then day trading?
No, I pretty much stopped day trading entirely. I don't have the time to be sitting there and day trading. The irony is I'm in my office all of the time, but it's a different level of concentration that you need for intraday trading. If I'm sitting here and I've got a bit of work to do, and you know this, and then your time, and then you get yourself into a day trade, that's going to distract you.
Massively.
So
Yeah.
you just can't get other things done. And I spend a lot of time with traders here in my office and in my community. And I wouldn't. The irony is, you'd say, well, you can just sit there and trade intraday trade, but I'll place trades intraday off of intraday charts, but I'm usually then looking to hold on to them for more than just a day. That's for sure. So yes, too much intensity when I'm trying to teach as well and chat through what's going on in the markets. And the biggest thing for me with intraday trading, don't get me wrong, I used to love it. But is, if you had to go out for a couple of hours, you'd come back and then you'd see something's kicked off, and you've missed an opportunity. That would really grate on you as an intraday trader.
Well, never mind a couple of hours. I mean, you can go to the loo some days and come back and you've got a massive hole in your account.
It's good you say that, because in the financial crisis, it was exactly like that. You go to the loo and come back literally 3 minutes later, and it's all, the markets would move 50 pips, 50 pips to 100 pips in 3 minutes. Now that's a daily range. So, yeah, a little bit different. So, yeah, I sort of I started to slow down the intraday around 2016, 17. I was doing a little bit less. I was still doing it, bits and pieces, but I'd certainly noticed that I was just doing less because I didn't need to anyway, because swing trading was there. So, and it freed up a lot of time.
Yeah, it definitely requires a different part of the brain, I find. I mean, for example, when I was, up until very recently, I was doing a day job on a regular basis, and I was trading because I was working from home, so I could trade every now and then, and I'd get back to the day job. But the focus, even on a quiet day, was not quite the same as what you really need for day trading. I mean, I tried a few prop firm challenges last year, I think it was, and yeah, I failed. I don't know, 3 or so.
Didn't I warn you?
I mean, they're pretty tough. The rules and all the rest of it. But just this last one I did, when I had the time and the focus, I crushed it in 10 days with 6K. The target, and on a 100K account, which is not bad. In just 10 days.
Yeah.
But there's no way I could have done that, as you say, doing other stuff, because the intensity of focus is a different thing. From just I'm at my desk, my computer, I can do this and I can do that. Well, it just doesn't work. I don't know why the brain can't seem to do it. I don't think it's this sort of multitasking thing. I think maybe it's like flying a plane or something. Would you be on your phone while you're flying a plane or driving a car? It's almost that sort of concentration you have to have, especially when the market gets busy.
The irony is, I'm not anti intraday trading, but I think that's where most people think they need to go. But the reality is, it's not where they need to go. It's the place which carries the most stress, as you said, the most concentration levels. Most people fail at intraday trading, a greater percentage fail at intraday. So trading is difficult enough as it is to be profitable. So 2/3, 67, well, you see the numbers from brokers, 70, 80% traders
Well,
lose
that's
money.
what brokers tell you. I think the
And that's
reality
just
is more
what they
like,
tell you.
yeah, it's more like 90, isn't it?
Yeah, I suspect so.
Really?
So why bully yourself into the hardest arena? And I understand why people want to do it, because that's why people play the lottery. They know that the odds are stacked against them, and they still do it. And who am I to say, having day traded for probably a day traded for the best part of 2 decades, but I've learned as a trading coach over the years that actually for most people, their disposition would be more suited to some form of swing trade, even if it's only a holding on to a position for 2 or 3 days or 5 days. It would suit them better that way than the raw intensity. I think the intraday, the temptation that's there with intraday is that, don't get me wrong, you can be successful, of course, as intraday traders, but I still think if I took any person with limited trading experience and they said, which way should I go, I would put them down the swing trading route and say, look, you can still do other things at the same time. There's lots of other things going on. I'm not putting anything against intraday, but when we're talking about the stats, and I want as many people who get into trading to be as successful as possible, but I'm going to tell them to do that, because I've learned as a coach that that's what happens to most people.
Yeah. And do you teach trading on stocks mainly, or
No,
no?
no. That's what I started out. Like I said, that first couple of years. Well, I was still trading stocks until actually to 2006. So, and then I've never traded stocks since then. But even up until that point, I was already mostly trading indices and then FX as well by 2000 or so. So no, it's mostly FX now, stock indices, bit of commodities, all that sort of stuff. The usual culprits, really.
And what is your strategy, broadly speaking? Are you using tools? Are you looking at, I mean, the obvious one, of course, you're using supply and demand areas and volume, but can you elaborate on what I've just said?
I use a multiple time frame approach to the market. So I'll start out, again, we're talking about time frames here. My analysis starts with a quarterly chart. So I'm like you said, I'm looking at support and resistance the levels, all the usual things within technical analysis, trend lines, support, resistance. Um, and from the quarterly down to the monthly, I'm trying to get my big picture view. So once I've got a big picture view based on those, then I'm going to take it down to the weeklies, the dailies. I might still be entering a position based on a 4-hour chart, but it all stacks up to the much higher time frames. So it's a top-down approach, just like from my old fund management days. Fund managers either have a bottom-up approach or top-down, macro related. This isn't macro; it's technical related, but it's a multiple time frame analysis. And then really, I'm either looking for more often than not a retracement within a trend. So if there's a trend in place, and there's only so many different ways to buy a market or sell a market anyway. So I'm usually looking for some form of retracement within that trend. At times, I will be going, if market comes down to a key support zone, then I'll be looking for divergences to then take a counter trend of some form, because a counter trend on a daily chart might not be it may not be going against the trend that's there on the monthly, because of it. On the monthly, maybe a multiple month or multiple year upwards trend. Take gold as an example. And if gold does a pullback, well, on a daily chart, it feels like it's counter trend. It's not. So if I'm taking a bullish divergence on, let's say, the daily, it's usually because I want to get hooked into what I believe to be a bigger picture view. So I will use divergences as an execution strategy a lot of the time.
Trading with weeklies and monthlies and so on, how do you cope with the drawdown on that? Because inevitably you're going to have some drawdown that's quite deep. But I guess you're presumably working with quite large accounts compared to most people, right?
What do you classify by drawdown?
Well, okay. Well, certainly drawdown in terms of you've got into a position. You're a little too early. Let's say you're buying. You've got into a position. You're a little too early, and it comes back on you, and now you're down quite a bit. But it still works within your bigger view of the weekly, for example. You realize you've come in a bit too early, but according to your analysis on a weekly and a monthly, it's still good. So psychologically, how do you cope with that? Because if you're on a 100K count, and it's probably not a big deal to go down 2K, right? I mean, where do you?
Well, firstly, it's my stop losses are based on the smaller time frames. The bigger time frames are the analysis. So it's not like I'm sitting underwater in a position for a long period, because my stop loss is actually still going to be, the analysis is the analysis on the bigger picture. Then I'm using the smaller time frames to then execute off. So the actual stop losses are still relatively close to the market on the smaller time frames anyway. So it's not that. Or having said that, like any other trader, I could still be, have the timing wrong, get stopped out, but the overall picture hasn't changed. So then I'm going to have to look for another entry opportunity, reassess it, and it might just be I've been stopped out on a bit of noise, like anyone else does on any other trading, and then I'll be there looking for another entry. So, but that happens to any trader.
Are you entering on a risk to reward that's like 1 to 3, or will you go to 1 to 2, or even 1 to 1?
Well, probably my biggest risk to reward is 1 to 80.
80.
Yes. So no, I'm not looking for 1 to 2s and 1 to 3s. I'm not. I call that vanilla trading, and that's fine. But no, what the beauty with using multiple time frame analysis is that if you get it, when you get it right, when you hook up, is you get in on the smaller time frame, but you're running the trade based on the bigger picture analysis. So, for example, I might get in on an initial trade with, for argument's sake, a 50 pip stop, but actually it might actually be a 500 pip or 1,000 pip target potentially. And then along the way, you'll be adding to the trade as well, which compounds the overall R multiple. So 1 to 80 is extreme, but certainly 1 to 50s, and in the anything 1 to 10 to 1 to 30 is not uncommon that I'm going to be looking for. And so yeah, it's a little bit different, but that's through combining time frames. So yeah, if I get a nice enough entry off of let's say a daily chart, or maybe even off of a 4 hour, but I'm still running it based on the weekly and monthlies, and if it starts to run, then the big risk rewards are there. Yeah.
What are your favorite assets to trade?
Euro dollar.
Okay. Is that just liquidity or something else?
Yeah, I mean, all the major currencies are highly liquid anyway. So I've always had this sort of focus when it comes to. I remember back in my career days, right away through into my trading days. So what I mean by that is I would trade an instrument and then trade it a lot. Well, I guess actually when I was trading stocks, I was trading a whole watch list. But once I started trading, for example, stock index futures, when I was trading the S&P became 70-80% of my trading. And for years and years and years. And it just so happens nowadays, now maybe in 5 years' time, it won't be the case. But certainly over the last I'm trying to think now. Yeah, since about 2016, I've been trading a big picture pattern on the euro. So yeah, so the last, 9 years now, the euro represents probably about 80% of all my trading. I do trade other markets. I'm in a New Zealand dollar trade right now, but by far the lion's share goes to the euro. Yes, it's the biggest currency pair, and I feel that I have this innate, you do feel this relationship with the market that you're trading, and so understand its nuances a lot. If I just went off and traded tomorrow pound CAD, I wouldn't know what it actually moves like other than just looking at a chart. But so no, I like sticking to what I know.
Yeah, it's true. You start to get to know these pairs almost like characters. You sort of get their traits and their quirks, and you kind of see how far they retrace to, and that kind of thing.
Mm.
I trade more the Euro Aussie or something like that if I'm going to trade the euro. I don't so often trade the USD actually, but
Yeah, I mean, again, it depends on what you're looking for. So you're looking at, short-term trends on something
yeah, I
like
think that's
Euro Aussie.
possibly it. It moves a bit faster when it moves.
Yeah, yeah, yeah. And I have to have a lot of patience in my moves, in my
Yeah.
trades. But I think it is important to have that comfort zone with what you're trading, whether it's the whether you're trading futures or options or CFEs, whatever, or even down to the markets that you're trading, that you do get to a point where you get comfortable with a given market. And so I'm quite comfortable with just trading that big super tanker, which at times, like any of the majors, can go into choppy conditions. Mind you, so can Euro Aussie, but like they all can. But I agree that some of the crosses, when they all of a sudden have a disparity between maybe what central banks are doing, and then all of a sudden they can have a short term run. So whereas I'm looking to be in positions for really multiple months at a time.
How much does news affect how you trade? Bank of England decision rate is an obvious one, but I mean, other news, does that impact the way you trade, or are you very focused on the chart?
Now I'm all over the news, really. So because although ultimately we're all most of us traders are technical traders, the news might kick off, the next move. So I'm always there for non-farms or FOMC, or like you say, we've got Bank of England. From when we're recording this, it's coming up in a week's time. And because that can be a kickoff move to break maybe a resistance level or a support level or whatever. So yeah, I'm always there. And because what happens is I'll have that core position, but I'm always trading around the position. So I'm always looking for that next opportunity to add something more to the trade if it breaks out and it's moved as another start what potentially could be the next leg. So actually, yes, I'm around for all of that stuff the majority of the time, because the news does create a volatility event at times. Not this past week from when we're filming this, though. Not for FOMC this week. It was a damp squib, but we sort of expected that anyway. But sometimes you get a feel, when there's going to be a big one.
What do you make of the move into gold, silver, even as the dollar's going very strong? It's a bit of a strange one. Where do you think this? Where's the end game?
Well, if you ask a lot of people on social media, then they're probably thinking 20,000. Yeah, I remember when gold was going up in the early 2000s, and when we hit the highs around 2011, everyone, all the traders, so to speak, at that time, all thought it was going to go to $5,000. But I think the reason that gold is doing well, as we know, is geopolitical events. So I think a lot of people have been putting some money into gold as a hedge in general, and we're seeing that from central banks as well, aren't we? So China have been buying a lot of gold over this past 18 months or so as well. So I think it's the central banks that have been driving it largely.
Especially China recently.
Yeah, and outside of that, some big investors buying it as sort of a bit of insurance as well. So where do I see it going? Well, where we're at the moment, the obvious level would be for it to reach for 3,000, but everyone's going to be saying that. But that's the next round number, isn't it?
Yeah, for sure. I just wonder why we keep going with gold and silver at this rate when I mean, I get the whole thing that it's a hedge, but why hedge is what I'm trying to get at. Why hedge? You only hedge this way, it seems to me, if you fear lots of other things are going to come apart. They're just the stock market or whatever. It's less the stock market, it seems to me. It's more the bond market. There seems to be a lot of worry that doesn't get talked about quite as much as what is going on in the news with the stocks. And there's this strange divergence. I don't know if there's a kind of lag, but there's a growing worry about bonds, especially here with gilts and so on. It's just, it does look quite ominous. What's your view?
Well, we had a peak event a couple of weeks ago, and when when the national newspapers are talking about the gilt market, then you know that we're probably getting close to a low. And funnily enough, UK gilts bottomed a couple of weeks from when we are filming this, right around that time. So I was watching bond yields at that point. So yields were up, obviously gilts were down. And so everyone was talking about UK gilts at 5%, bond yields at 5%.
Which is higher than it was when we had that panic over
Yes,
Liz Truss.
Liz
So
Truss.
it's
Yeah,
really
yeah.
weird.
Yeah, and no, I totally agree. And it's just ironic that from a sentiment perspective, I was talking to my trading community at the time, and I said, "This." I used the word. It's like the spidey senses are going off. It's getting a bit too frothy. The market at that moment when everyone's talking about something like that. So anyway, we put that low in, but it is still all right. So that uh, the market may bounce, but you don't know whether that is just a dead cat bounce overall, and that we're still going to roll over. So I think there's a lot of concerns at the moment about the UK economy. Obviously, the Chancellor here is trying to talk up growth, so is the Prime Minister, but there's a lot of pessimism in UK companies. In fact, was it something like that came out this week? 1 in 5 UK PLCs are issuing profit warnings. And that's just the PLCs, let alone the small businesses who are having to contend with rising minimum wages and the national insurance contribution changes as well. So there's lots of pressures on businesses out there. So I don't think this whole growth story is going to come, that soon. So I think we're going to have to work our way through a sticky patch here economically. And so coming back to what you're saying about the London gilt market, then yes, there are still concerns there.
I can't remember who it was on a podcast recently saying that when you get into this kind of situation with yields, very high yields, the way we've got here, investors move to shares, which might well explain why the FTSE is still quite high in spite of all the economic worries and the worry about, the interest rate being high and inflation still sticky and what have you. But money is going into stocks because of the worry over bonds. But then that suggests there's kind of lag, that at some point people investing in stocks will have to get rid of them because bonds ultimately are a much bigger asset globally than stocks. So if we get into trouble with bonds across the world, if we're one of the first dominoes, that will pull down stocks. But at the moment, we've got this sort of artificial.
Yeah.
I mean, there's just such a disconnect between what is said in every other podcast you listen to, if not every podcast you listen to about the economy. The British economy is going down the drain, etc., etc. But if you look at the stock market, you'd think we were in a boom.
Yeah.
It's
Yeah.
just crazy.
Yeah. But we're seeing it across Europe as well. You look at
Germany,
Germany
more,
and
even
look at the
more.
DAX keeping on breaking new all-time highs there, and yet look at the German economy.
Yeah, it's just really weird. Such a disconnect.
Well, part of it, I think, is down to big global funds and their distribution. They have to asset allocate to different jurisdictions, North America, Europe, etc., etc. So there's an allocation thing that's going on, and stocks will pure valuations look quite cheap across Europe, and they have done recently. I think that's why the DAX has done quite well. So there are other things.
Could it also be because the euro's weakening? I mean, it really is quite sinking, isn't it, at the moment?
Yeah, overall it's been
Yeah.
weak over this last 4 months, and so again that makes it makes valuations of stocks quite compelling for some funds to put some monies in, and that's definitely what's been going on
Yeah, I think so. Yeah.
because you wouldn't buy based on the economies right now.
Still on currencies, we had the yen carry trade worry just last year, a few months ago, and I was looking at the charts only a few days ago and noticed that the last time we had an end to a bull rally against the yen by most of the other pairs, the pound and the euro and so on, was 2007-8. And I'm just wondering if now we've got the yen getting a little stronger and the possibility of the Bank of Japan raising interest a fraction, but still that might attract money, and the pound weakening, and also a very likely event with the Bank of England cutting rates, and these pairs are coming down, and if they fall much more, they're going to really go off a cliff. At least history suggests they will. I just wonder if is this sort of the canary in the coal mine kind of situation, because we know what 2007, 2008 was.
Well, yeah, I mean, like coming back to what you say about the carry, because that's not the case now. And like you say, with Bank Japan looking to probably raise again in the summer, so the market's always forward looking, and so you're quite right. So with everything that's coming, I was just saying to my traders earlier today, I do think the UK and therefore the pound is definitely one to watch over the months ahead, because I think that we could see some downside surprises from the economic numbers. And so I agree that yes, with the slight optimism that's there in Japan towards rising interest rates, and a slight tightening there, and actually a mispricing here in the UK as far as how many cuts the Bank of England will do. So, because I think if the UK economy deteriorates, certainly the door is open to maybe an extra cut or two that's not actually priced in at the moment. So it comes back to your argument there of a downwards push on the likes of the pound yen.
Yeah, well, we'll see. I think it'll start to show itself in the next 2 to 3 weeks. We'll see.
Well, yeah, I mean, we've got the GDP coming out of the UK in 2 weeks' time from where we are right now. Got Bank of England next week anyway, but that's widely expected to cut. But again, it just sets the stage a little bit. And I think the pound.
Yeah, I think politically as well, we're kind of. I can't help feel the beleaguered prime minister is going to say, because he's banging on about growth all the time. Well, of course, growth, you need to get that interest rate down for at least small to medium sized businesses, otherwise they can't borrow and invest. So the pressure surely is going to be on the Bank of England to help them.
100%. And I mean, I don't want to go too political, but at the end of the day, the government have taxed everybody, to the hilt here. And so they brought it on themselves. They got into power on a promise that they weren't going to raise taxes, and then they've gone and done that. So, yes, I think the UK economy is going to go, hit it's already hitting now some very muddied waters. And I don't think we've seen the beginning of it yet. So over the coming months. But yes, as we see the data releases coming out of the UK, I don't think it's going to be the high street's dire. And I think we're going to see this coming across. I think probably the entertainment industry, restaurant chains, they're going to be struggling as well because people aren't going to be eating out so much. And so there's one chain though that outperforms in a recession. Do you know which chain that is? Well, it's probably more than one, but Domino's Pizza.
Right. Okay. Well, that would make sense, wouldn't
Because
it?
the irony is people go for junk food when they haven't got a lot of money to be going out for other things, then they'll get a pizza in, or maybe they get a burger or whatever. Yeah. So yeah.
A friend of mine owns a fair few Domino's stores, and like even through the great financial crisis of 08, 09, they were doing great guns business, ironically. But
Yeah, well, it kind of makes sense. Yeah.
yeah.
Switching topic, your own coaching and so on. How do you do that? You do that in groups online, or do you do any
Online,
one-to-one?
I don't really do one-to-one anymore, but I have a small online community. I have a live trading room and use a piece of software for that. And I just project my charts and then I talk. We usually do a few sessions, 3 or 4 sessions per day, starting at the beginning, morning, and then depending on the news, what's going on. And then, so I'm either doing a coaching session or it's a news-based session. And I'm placing my trades while I'm there. So it's all transparent in the community because I'm an authorized money manager as well. So yeah, when I'm placing my trades, they're seeing me as I'm doing all that sort of stuff. So I just enjoy chatting about the markets all the time, right?
How did you get going with that as a business? Did you just put yourself out there with ads, or did you talk to people
No,
and
it's
find that
organic.
they were interested in working with you, and then you'd bring in people and you'd have one-to-ones and then build it into a group, that kind of thing?
No.
Okay.
Well, it started in 2002. I was bored. I'd gone full-time trading in 2001. And in late 2002, I was buying in. Back then, you used to have to buy information, spend out for information. It wasn't freely available like so much information is now. There was no social media, obviously, nothing like that. And so a friend of mine was running a network of investment clubs across the UK. And he said, Charlie, would you put some notes together for our members? So we've got all these investment clubs. And that was sort of how it all sort of started. It gave me something extra to do. I said, yeah, okay, I'll write a little. It was like, it started off as like a little 2-page newsletter. And that was just an organic thing. And then ended up getting a following as a result of that. And then as technology came along, I had this. Well, back then, I had my charting software that I used to use back then had a little chat channel. You could have your own little traders chat channel. So some of these people came in, and I was just chatting with them, in this channel within the charting software. And then that morphed on to the early sort of chat room softwares where you could be on a microphone and actually share your screen, and so it just became an organic thing. And so I think just back then, I don't know when YouTube started, but started putting some content onto YouTube. Now everyone's got on YouTube, but and it was an organic thing. It just grew over the years. So no, I've never advertised. I've never done anything like that, and to this day. So yeah,
And how much does your typical program cost?
about £100 a month. So £100 a month, people get to come in. They can be in my trading room all week long. I have day traders in there. I've got a lot of business owners who can come in and out during the day, and they just learn and see what I'm doing all the time and learn from how I'm managing my positions. But the key is that we are all different. So they learn all my strategies and techniques, and they can see me applying it all in the market. But I don't expect everyone to follow along and do every trade that I'm doing. They're still doing their own stuff. But the point is they're in a community, and that's really key. And where we all chat every day. And I'm the one doing the chatting on the mic, but they could chat in the box. And so it's a great learning environment where people can pick up on all of my 28 years worth of experience and tap into that for that. If they want to follow my trades, they can do that, but they can also apply what I'm doing, because someone might say, Charlie, they don't want to sit on a trade for 2 months, but they'll still take some of the trades and they'll manage them themselves differently, come out, so, and that's what's wonderful. You can have 10 people taking essentially the same trade, but all manage it differently, or they're trading on different time frames and trading more frequently as well. So yeah.
And what kind of software do you use for your chat? Is that kind of a Discord or something similar?
No, I pay for I have my own branded software. So I have my own branded software. Even got my own app on the app stores and stuff. So I don't use general, Telegram or whatever. So I actually pay to have my own branded stuff because I just preferred it that way. I prefer to have my own, internal community sort of thing.
Okay, so did you get a developer to do that? You just
Yeah.
told him what you want, a
Absolutely.
bit like this, a bit like that.
I mean, essentially, it's like my app is like a WhatsApp really group, but I didn't want to have to be on WhatsApp. I wanted to have it branded. Everyone knows what it is, and I can put up screenshots like you would do with WhatsApp. But it is our own thing. I've got my own calendar on it, my blog on it, so people can use it as a resource as well. And it's my way to communicate to my wider audience. So when I'm taking a trade, for example, I can put on there and say, "Oh, I've just bought this," and and all of that. So that all goes on there as well.
Do you ever step outside to, the events that go on around the world and speak at those events about what you do, or are you quite content with your own community?
I do, and I have done. But fun enough, there's an event coming up in April, but I just can't. I'm not going because it's on non-farm payrolls day. Normally, I'll just people will say, "Oh, can you come along and speak at this event?"
Oh,
And
is
I'll
that
say,
Simon Campbell's event?
Yeah.
Yeah,
And-
I'm going to be on the panel. Or
Oh,
one
cool.
one of the
Okay.
panels.
Right. Well, I'm not going this year because I said
Okay.
his event was always on non-farm payroll. He has this innate ability to put it in on. It's always on a Friday, and it's on the first Friday of the month. And I want to be with my members more than anything else. So as much as I like going to a show or whatever, so no, I'm not going to this occasion, but I normally go if it's on a different date or whatever. But so no, I've talked from London to Kazakhstan to Bangladesh. I've been all over doing. Been invited to do speeches, presentations, or whatever. But I'm doing. I find in myself nowadays saying no to actually traveling to
You're
go
getting
do
old.
something. Yeah.
It's getting a bit
So,
tiring.
yeah, doing a bit out in Dubai, so maybe, but I don't mind that.
Yeah. Okay. They
Yeah.
pay you well, do they?
Well, yeah, that's the idea. Yeah.
Yeah, exactly. Cool. What do you got coming up, trading wise? Anything different? Anything new?
What do you mean?
Okay, with the community, staying with that.
No, the community stays as it is, and that's just an ongoing thing. I derive from the community. What do I get from it? It goes back to what I said earlier on. In 2001, I felt very lonely as leaving a career to then just sit and trade. And so indirectly, I ended up finding a way to live my life where I was still getting interaction. And that's still what I get with the community right now. So I see it's my baby really. And it's just that I look forward to coming in here at 7:00 in the morning and getting started for the day, with my community. But so no major changes there. But I have got some. Funny enough, I'm more of a manual trader, so I like trying to work it all out. I like doing all my own analysis. That's the buzz that I get. It's the challenge of pitting myself against the market. But there's so many people out there who want to use technology. And so, yeah, we've got some technology coming up. But I won't use it, because it's great. But if I use technology to take my trades for me or to give me, statistically based is what it is, using artificial intelligence, giving me, trade setups, well, then the whole challenge of what I've just said and what you said at the beginning, the passion that you have for trading, for me, in my mind, is gone. Now, that's me. There's millions of traders around the world who don't see it that way. They just see it as a way to make money. And so they see it differently. So and there's this increased demand from people for that. So my developer, one of my developers, he's put his stuff together. So we've got that, but it just suits some people who want that type of AI based technical trading where they don't have to think and they just get on with their day. And for me, it's an art form, and I'm old school in that regard. But outside of that, I still manage funds, I manage money for other people. So I have to go and see my regulators, a few times a year and all of that. And so that's fairly normal. Got some projects, fun enough, like I just said, in the Middle East, because people approach you and say, "Oh, are you interested in doing this?" And so those sort of things crop up. But generally speaking, I'm here in my office, monitoring the markets on a day-to-day, week-to-week basis, and that's where my passion is, and it still is.
What does it require if you want to set up as a funded trader? You mentioned regulations. Where do you start? Somebody approaches you, say, "I love what you do. Here's, 50 or 100K. What can you do with it?" Where do you go from there in terms of sort of setting that up? If you could talk us through the basic.
So when it comes to regulation here in the UK, if you want to manage other people's money as some form of fund structure, then you have to have regulation. And so you can't, unless you're a big hedge fund, then yes, you can get directly authorized from the FCA. But otherwise, then you're going to need to find a regulated company who will then authorize you under them. So, and that's essentially what I have. So I've had that for the last, I think it's about 8 years now, 9 years. And so they regulate my activities, and they look after all the clients. So they take care of all of that, the regulation side of things. So all I have to do is focus on my trading essentially, and they take care of all of the regulatory stuff. But it was important for me to do that. I think when you're, essentially I'm a trading educator, aren't I? I'm a trading coach. And I think it's really important. In my mind, it was important for me to be to be authorized here in the UK, so that you can say, well, yeah, I'm a trading coach, but I am putting my money.
Yeah, I'm not a fly by night. Yeah.
Yeah, you've got that authorization. I would rather the trading education industry was all regulated, because there's a lot of educators, 80% of educators out there are just. So I would rather that they regulate the industry. But for me, that was why it was important for me to say, yeah, I'm an authorized money manager here in the UK. You have to have all that track record. You're governed by the company that regulate me. And so I thought that was a good thing. So.
And where do you go looking for one of these companies?
Well, I won't mention their name
No, you don't
on
have to
here,
mention the name, but-
yeah, I don't know. I guess you just have to look around, Google it, whatever.
Okay. Yeah.
This is very different to these funded account firms. It's a very different sort of thing. You're trading on a demo account. This is for people that want to manage, as you said, manage client funds. Then yes, and so what you need to have a track record to start off with. So you're looking at a minimum of 3 years track record. And experience in the market. So if someone was 4 years into their trading, would they get authorized? Probably not. I've been doing it 28 years. I've got a lot of industry experience. So there's an element of experience as well.
And so what are they looking for in terms of results? Return per year? Is it 10%?
No, it's not an amount. They're looking at your risk management more than anything else. So it's not like, oh yeah, you've got to have made X%. It's about, how do you manage risk? How do you trade out in and out of drawdowns as well? They want to see that you're going to, because they know you're going to have drawdowns. If you approach a regulator and your equity curve was like that, it would raise flags, because they know that there must be some bullshit going on, because no one has. There's plenty of people who will show that on on social media or wherever, but that's not the reality, So they want to see, right, okay, how did he manage out of that drawdown there or that drawdown there or that flat period, whatever. So they want to see real returns. But yeah, it's not about, oh yeah, you've got to have made 50% a year or anything like that. So,
Yeah, that would be pretty amazing if you could do that anyway.
Yeah.
But anyway, we should make a pause here. It's been great talking to you, Charlie. Thanks so much.
yeah, thanks ever so much for having me on. And yeah, happy trading.
You too. Thank you.